Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Tuesday, January 22nd, 2020, and we again find ourselves in the final hour of the trading day. As I mention each day, in my opinion, the most valid prices to make your buying and selling decisions are the prices as close as you can get them to the close of the market. During the day, you have the algorithms, you have the day traders battling it out. I consider it noise. At the end of the day, particularly in the last hour, in the last few minutes, the large financial institutions, the market makers come in with size and they start moving the market at the end of the day, to which, in my opinion, are the most valid prices. So those are the prices that I want to make my buying and selling decisions from. So anyway, thank you so much for coming today. I appreciate it. It's always great to have everybody here. I hope everybody had a nice, long, extended weekend and had some fun. Boy, we're having an interesting day today, that is for sure. The Dow Jones is currently down 139 points, well off of its lows. It was down close to 200 points. NASDAQ's down 18.9. And the S&P is down 6. Boeing had some bad news today, which is being a large draw on the Dow today. Also, we had some news about virus outside of China that has killed some people, and I think there are now some people in the United States that have it as well. So that's kind of weighing on the market also. So anyway, let's take a look here. Hey, Wade Foster, good to see you. Thank you for coming, Wade. Hey, Greg, hope your day is going great. And I finally got me a little trend system down thanks to you, Steve Mosley. So thank you so much. Well, you are welcome. You are welcome. Glad that you. I think you got a book, right, from Steve, Moving Averages 101, I believe. So anyway, that's great. Good to have a system down. Zach is here. Nice to see you, Zach. Thank you for coming by. Appreciate it. Good to see you. You and Steve Mosley. Sorry, typo. No problem. Scatty13. Hey, how you doing? Nice to have you here. Appreciate you coming by. So, all right. Well, listen. Here's the plan for today. First of all, we're going to go ahead and run the U.S. legal disclaimer. Second, we're going to come back. We're going to take a look at my current positions. We're going to talk about why I bought, or when I bought them, why I bought them, how I'm going to manage them going forward. After that, we're going to spend a few minutes talking about some trader tricks, some good trading words of wisdom, generally having to do with trader psychology. In my opinion, trader psychology is the most important skill that you can develop. Of course, you have to study, you have to learn about support, resistance levels, indicators, entries, exits, all that. That is for sure. But once you have all that down, then you have to create yourself a plan. And following the plan, even if you have the best plan in the world, if you can't follow it, it doesn't matter. So if you find yourself not being able to follow your plan, you need to work on yourself. You need to work on and get some discipline so you can follow through. My advice, my two best pieces of advice with if you're not following your plan is: one, reduce your position size so that the emotions are not amplified either to the upside or the downside. That could help you follow your plan. And two, speak to somebody, a family member, boyfriend, girlfriend, husband, wife, whatever. Let them know what you're doing and explain your plan to them, and have them be your risk manager. Have them follow your trade so you're accountable to someone, and that should help you stay on track as well. We're going to spend a few minutes on that, talk about some trader psychology. After that, we're going to go through my watch list. We're going to take a look at all the stocks on my watch list and look for potential setup. At the end of the day, I have 3 requirements when I look for a setup. 1, I need to see a confluence or a combination of signals. I look at indicators such as MACD and RSI, moving averages, ATR channels. I look at these indicators as potential groups of buyers. And if you want a stock to go up, you need to put yourself in with as many groups of buyers as possible. So therefore, if one indicator represents one group of buyers and another indicator represents another group of buyers, if I can get those 2 or 3 or more indicators lining it up, then I look at that as multiple groups of buyers. So you need to look for a confluence or a combination of indicators / buyers. That's step 1. Step 2, I want to make sure I have a good risk to reward. I want to make sure that if I'm risking $100, I can make at least $200, and that's defined by where my stop is below me and then where there's some kind of legitimate resistance above me in order to, make that determination. Do I have at least a 2-to-1 risk to reward? And then step 3, make sure you do not have too many correlated positions. You don't want 4 stocks in the tech industry, because if it goes up, you're going to do great, but if they're going to go down altogether, you're going to get hammered. So, look for different segments of business sectors. Maybe look for some tech, maybe look for some tobacco, maybe look for some healthcare, maybe look for some automobiles. Just have some diversification. You don't want to be too heavily correlated in one particular industry. And ideally, if you can go outside, get some oil, bonds, gold, silver, something like that, that will help you diversify even more. So I'm going to go through the watch list. If I find something that meets those 3 criteria, I'm going to go ahead and enter a position at the end of the day. After the market closes, if anybody has any questions for me, please feel free to ask me. I'm happy to clarify anything I discussed. If you'd like me to take a look at some stock symbols and have you give you my opinion on that, I'm happy to do that as well. If there are any stock symbols that you would like me to look at before the close of the market, if you think that they would be helpful for the group, please just go ahead and put a star by it so I know that it's time sensitive, and I'll do my best to get to it before the close of the market. So, all right. So that's the plan. So listen, if you could hold tight, I'm going to run the U.S. legal disclaimer. I'll be back in about 40 seconds. Thank you.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okie dokie. Thanks for holding through with me on that. Wade Foster says, I have all of his books. LOL. They are all great. They are definitely great. They are definitely great. Marco, hey buddy. Good to see you, my friend. That's Marco, our friend from Slovenia in Europe. Hope you're having a nice evening. Thank you so much for being here, Marco. So, all right. Well, let's get to it. I do only have 2 positions here today. First one is the overnight SPY position. In case we have some new viewers, just want to inform them what I'm doing. But I do buy the SPY, SPY. I buy that every single day at the close of the market. Right at the close, I sell it first thing the next morning. It has nothing to do with technicals, indicators, anything. It just has to do with a long-term, back-tested, profitable system to trading the SPY. And this is from Liz Ann Saunders at Bespoke Invest. With this approach, you have 2 options, or they've tested 2 options. Option number 1 is buying SPY, S&P 500 ETF tracking, right? Buying SPY at the open each day and selling it at the close. So if you bought the open, sold the close, bought the open, sold the close every single day since 1993, you've actually returned a negative 13.9%. However, if you did the opposite and you bought the SPY at the close, like I do, buy the SPY at the close, sell first thing the next morning. So you buy the close, sell the next morning, buy the close, sell the next morning. If you use this approach every day since 1993, you'd have returned a positive 634.2% return. So there's a huge difference in when you buy and when you sell. So past performance is no guarantee of future results. We know that. That's true for any trading approach. But I love this chart. The blue line is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. You can see there's a clear difference in the performance. But I like this chart because it shows you, if you do have an edge and a repeatable edge over time, what your equity curve can look like. There's ups and downs. Things don't go straight up. There's always some give and take, but in the long run, this has worked out very, very well. It's worked out very, very well for me in 2019, 2020 so far, slightly underwater on this approach, but that's how it goes. I remember last year in May of 2019, I think in the month of May, I lost 80% of all my trades, but the other months, I had a great trade. So it was very profitable. It's something I'm continuing to use every single day. So that is why I buy the SPY every day at the close and sell it first thing the next morning. So this particular trade, not so hot. I bought the SPY on last Friday at 331.95, and it gapped down this morning, sold it at 330.92. So overnight loss on this particular trade, but you can't just look at you can't look at every single day and go, oh, I lost money, it doesn't work. It has worked well for me, it really has, but there's ups and downs. So anyway, overnight loss on this particular trade. I will be buying this again at the end of the day. Alrighty, second trade is XLU, utility tracking. I did buy this back here on the 9th of January. The reason I bought it is we were above the 1 ATR channel. This is the green line. We were above the 1 ATR channel. We came into the value zone. We moved sideways. This is what I'm always looking for, right? I'm looking for us to be above the value zone, come back into the value zone, move sideways. Then I look for a V1 or a V2 as an entry. I was looking here for the V2, but it didn't trigger. Here's day one, here's day two. Day two washes out day one. Day three did not close above day one. So I didn't have that trigger. But what I did, you see the orange triangle or the green triangle here? This was my trigger. And that I bought the next day. And the reason what's going on here is here we have day one. Day two washed out day one and closed below. This is a negative sign. But if you can get a negative sign immediately followed by a reversal back up, that is my trigger. These are called fake out entries. So here's day one, day two went above and then down below, but the next day closed above the day one. And in the context of being above value, in value, sideways movement, and then the trigger, that's where I bought it right there at 64.22. And you can see this has been a fantastic trade. 2 profit targets today. From entries so far, this thing is up 4.8%. So pretty good trade, especially on something like XLU. So 2 profit targets today. I will continue in this particular trade until a couple things happen. Either one, we close below the previous day's low, we lose the 70 RSI, or I continue to phase out until I am out of shares. So this has been a great trade. I haven't had a lot of trades lately because the market's been so overextended and I'm waiting for a pullback. So anyway, glad to have this trade, and this has been really nice. So that's basically it on the the two positions. The overnight SPY trade was a losing one, but we had a nice trade on this one here. So let's take a look at some of your current positions. I know Kurt bought BRKB, which is Berkshire Hathaway. He bought this back here at 288.35 on the 15th of January. Started out nice, couple nice days up, boom, boom, boom. Not sure if he took any profits or not, but it did move more than 1 ATR. If I was in this trade, I would probably get out today because it moved more than 1 ATR away from my entry, and today it's closing below. Looks like it might close below the previous day's low. So anyway, so far pretty good trade, even if he locks this in today. But Kurt, if you're out there, let me know what you're doing with this particular trade. But glad to see it's still profitable. Amon Solo had a nice trade back here on the 13th of January. We were under the 200-day moving average. Next day we went over the 200-day moving average. He bought it here at 34.83 with the 200-day as his stop below. The nice thing about these particular, under 200, over 200 is if you're wrong and the next day or in the coming days it closes below the 200, you get out for a small loss. But if you're right, you have the potential for more upside, which is exactly what happened here. So this one's moved up really nicely for him. Does look like earnings are today. So if this were me, not telling anybody what to do, but if this were me, just, my filters is that if there's earnings, I have to get out before earnings. One of the best way to put your account at risk and lose a lot of money is to gamble through earnings. You really never know what's going to happen. So, our first priority in trading, number one priority is always try to conserve capital first. Rather than making money. That should be the priority. Of course, we want to make money, right? But that's the second priority. First priority is protect yourself from a loss, and the best way to protect yourself from a loss is not to gamble through earnings. Solo had another nice trade back here on at $22.40 back on the 14th of January, under 200, back over 200, giving him a good risk to reward ratio. If he's right, if he's wrong small. If he's right, he can be large. Large. Looks like this has moved one ATR away from the entry, and it looks like we might be closing below the previous day's low. So not telling anybody what to do, I'm just giving you my opinion. If I was in this trade today and it closed below the previous day's low, I would get out here. And oh, nobody had this. Nobody had this. That's right. This was Walgreens. We were just looking at it. We came down here. We moved sideways. We have definitely moved to the downside here. It's a 2763. If in the coming days we could close back above, tomorrow if we went up, we'd have a nice V2. We'd have an under 30, over 30. We'd have a rejection of the 200-day and the negative third ATR channel. This would be very interesting tomorrow, so I'm going to keep this up there for tomorrow, see what happens. So that is about it. So let's take, hey Bing He, good to see you, my friend. Nice to have you here. Hope you're having a nice morning. Bing He says SDOW looks interesting. SDOW. Okay, so ProShares short. Yeah. So yeah, it does look interesting. It went under 30, over 30, under the negative third ATR channel, over the third ATR channel. We had a V2. Here's day 1, day 2, day 3, day 2. Washes out day 1, day 3. Did gap, but it closed the gap and then went back up. So yeah, this does look interesting. I think it gives you a good risk to reward. Remember though, if you are buying this today, you are betting on the market going down. Christopher Hitchin, good to see you. Hope you're having a nice evening. Thanks for coming. Evan says, good afternoon. Hey, Evan, what's going on, buddy? Nice to see you. Murat, what's going on, Murat? I hope you're having a nice evening in Norway. That's our friend Murat from Norway. Hope you're doing well. Richard Vlope, hey, how you doing? Appreciate you coming. Richard says, ever think about hedging the overnight SPY trade? Maybe at the beginning of the week, buying a small Delta Friday expiration put. Just a thought. Curious on your thoughts. No, I haven't. I don't do a whole lot with options. I mean, I do sell options. I sell premium sometimes, but I just try to keep it simple with the overnight SPY trade. Of course, if it goes up, if it just keeps going up, you're going to lose a little bit of money on the puts that you bought. But no, Richard, I just try to keep it simple. I just go off of the data and the back test that shows me. And, just from doing it now for about a year's time, there's ups and downs, right? There's ups and downs, but I haven't thought of that, but I appreciate your comments for sure. I'm not saying it's not a good idea. I just haven't thought about it and haven't really investigated it. But thanks for coming, Richard. I think this is the first time I've seen you here, so I appreciate it. Hope you keep coming back. All right. Take a look here. All right, so listen everybody, this is the time of the day where I do like to talk about trader psychology. There's some really good Twitter channels out there, some really good Facebook channels out there that put out some really good trading words of wisdom, good things for us to think about, mainly having to do with psychology, which, as you know, is the most important skill in my opinion to develop. This is a post from Facebook from Zahir Anwari at the New Traders, Rich Traders group on Facebook. Here's Zahir's channel on Twitter. It's at Zahir Anwari, one word. And he has a really good post that I'd like to share with you, but I would suggest following him. He has some really good stuff. I was looking through his Twitter channel and found some really good sayings that I think would be helpful for you. But here's the post. So, and I'll I'll make this easier to read in a minute, but rules from self-made billionaire Paul Tudor Jones. And if anyone doesn't know who Paul Tudor Jones is, he's one of the most famous traders in the world. He's a billionaire, futures traders. I mean, one of the best in the business, if not the best. So if somebody of that stature, has some rules to follow, we might want to pay attention. But how many are broken on a daily basis by the 80% of people blowing up accounts? So, they say 80% of people who start to trade blow up their accounts and lose their accounts. So that's what he's talking about. But how many of these rules, of Paul Tudor Jones rules, do people break every day? So, let's be honest. Let's take a look at these rules and see if you find yourself breaking any of these. Okay, so again, this is from Paul Tudor Jones. These are his rules. Number one, the market is going to go where it is going to go. Right? We never really know. We just don't know where it's going to go. So try to stay away from predicting what the market's going to do, because number one, the market is going to go where it is going to go. Number two, never play macho man with the market or macho woman with the market. This is very important. If the market is extended one way and you have this opinion that it can't go any higher, don't argue with the market, right? Wait for a real setup, wait for something before you enter the trade. But I've been in this position where I've played macho man with the market and the market just laughs, right? I cut that out about 20 years ago. So if you're playing macho man or macho woman with the market, just stop. Number three, never overtrade, right? Overtrading is something that a lot of people do. It's dangerous. It used to cost you a lot in commissions. Gratefully, that's not the situation now. But, if you're overtrading, you probably don't have a real good trading plan. You're probably being impulsive. So number three, never overtrade. Number four, I am always thinking about losing money as opposed to making money. I like to hear this because this is exactly how I think. Just what I was talking about with earnings. Number one, thinking about not losing money. What's the best way not to lose money? Not gamble on earnings. So number four, I am always thinking about losing money as opposed to making money, right? Does it sound negative? Maybe, but it's the number one priority you should have. Conserving your money, not try to do whatever you can not to lose money as opposed to make money. Number five, risk control is the most important thing in trading. Of course, that dovetails right back to number four. You have to think about risk first. I always think about risk first. I don't think about how much I'm going to make. I'm going to think about how much I'm going to lose. So risk control is the most important. Number six, when I am trading poorly, I keep reducing position size. If you listen to market wizards, if you listen to some of the best traders in the world, this is a common theme. When they are doing poorly, when they're in a drawdown, they reduce their position size instead of increase it. How many people out there increase their position size when they're trading poorly because they want to make it back, right? Yeah, I'm guilty of that. I used to be guilty of that. So when trading poorly, I keep reducing my position size. Number seven, don't average losers. Okay, well, there's the old saying, losers average losers. If you have a position, it's going against you, then you are wrong. Why throw good money after bad, right? So don't ever average losers. Number eight, decreasing your trading volume when you are trading poorly. Same thing about when you're trading poorly, reducing your position size, reduce how many trades you're making as well. Number nine, increase your volume when you are trading well. Okay, yeah, when you're trading well, things are going your way, then yes, you can start increasing your trading volume or the amount of trades that you take. Number 10, the most important rule of trading is to play great defense, not great offense, right? Again, great defense goes back to position sizing correctly, getting out quickly when you're wrong, not averaging, reducing your position size, reducing the amount of trades when you're not trading well. So, you have to play offense and defense in trading, no doubt about it, but defense is the most important. Number 11, every day I assume every position I have is wrong. I was really glad to hear this because I had never heard this before, but you've heard me talk about this before. This is what I do. I assume every trade I have is going to be wrong. And is it negative? Maybe, but what it does, it sets me up to be able to get out of a trade quickly. If I get into a trade and say, this is probably going to be a loser, and it is, well, then I'm right. Ego's protected, and I can get out quickly because I thought I was going to be I thought I was going to lose in that trade anyway. And then if I do have a lose, I'm like, I'm right, and I get out. If I'm wrong and the market goes up, then I'm pleasantly surprised. So I was really kind of excited to hear that Paul Tudor Jones thinks the exact same way I do, because I had not read this till yesterday. Every day I assume every position I have is wrong, because then it will make it easy to get out. Don't be a hero. Don't have an ego. Of course, grind it out. Do what you're supposed to do. Don't let your ego get in the way. Don't be a hero. Number 13, I always believe that price moves first and fundamentals move second. So yeah, he's a technical analyst, right? He bases his prices on the movement of the prices. He bases his trades on the movement of the charts, right? And he feels like the fundamentals will follow. Number 14, I try to avoid any emotional attachment to the market. Well, that's a tough one, but it's true, And the best way to do that, reduce your position size. Don't have too many positions, right? The more positions you have on, the more risk you have, the more emotionally attached going to be the market. Number 15, don't focus on making money. Focus on protecting what you have. Okay, well, this dovetails back to all these other things. The common theme here, guys, is protecting what you have. So anyway, I hope this is helpful. When I saw this, I was like, oh, this is great. And I want to thank Zahir Anwari. And again, you can follow him on Twitter at Zahir Anwari, ZAHEERANWARI on Twitter. But thank you so much for that, sir. Appreciate that. That was very helpful, and I hope you guys found it helpful as well. Whoa, okay. Okay, Richard says, thank you for answering the question. Much appreciated. You're welcome, Richard. I hope I could give you a better answer, but just honest answer. Yeah, I've never considered that. I just kind of want to keep it simple. I know in the long run, this approach has worked very well just as is. Doesn't mean it's going to in the future, obviously, but I will stay with it until it proves me otherwise. Gamer Squad, what's up, my friend? Nice to see you, David. That's our friend from Denver. Toby is here. Hey, nice to see you, Toby. Hey, Greg and everybody. Great to see you, Toby. Frank says, hello, Greg. Hey, buddy. What's going on, Poet Master? Nice to see you. William Green. Hello, Greg and all. I know you don't like less expensive stocks, but I am looking at Ford today, looking for a reason not to buy. Oh, well, listen. Yeah, Ford is a less expensive stock, but I know what it is and I know what it does. And it definitely is followed. So, well, let's take a look at Ford. All right, we were above the value zone. We never closed below the value zone. We made a lower high. We did not wash out the prior low. Here we made another lower high, and we did wash out the low today. I could see taking this. I mean, we had a lower high. We washed out the previous low. Looks like we've rejected the 50-day moving average. We have a V1. Here's day one, day two. Day two washes out day one. If today closed above yesterday's close of 1916, to me, it would be legitimate. So 1916 is kind of, if it were me, again, I would need it to close at least above 1916, which was yesterday or Friday's close. But I do like the V1. I like rejection of the 50-day moving average. I liked it. It looks like it's going to close back up into the value zone. I like that it washed out this lower highs low, that swing point. 4788 RSI. If I bought this today and in the coming days it rejected the 50 and closed back under, I would just get out of it. If it closed above the 50, I'd keep it. If it rejected the 200, I'd get out of it. If it stayed above the 200, I would keep it. So this doesn't look bad. It doesn't look bad. I think it offers a decent risk to reward, and basically my stop on this trade would be at 916. So, if I'm wrong with the close below 916, 916 is halfway between here and here. That's the halfway. That brings in the 50% Fibonacci number. So, yeah, I think it looks pretty good if it closes above 1916. So I hope that helped, William. William says also SLV, deep V1 with bounce off 100. Thoughts? Let's take a look. Well, it's not a V1. Here's day 1, here is day 2. Day 2 certainly washes out day 1, but this would have to close above yesterday's close in order to be a V1. Does that make sense? It would have to do this. See, here's day 1. Day 2 washes out day 1, yes. Then it'd have to close above day 1's close to be a V1. So this is not a V1. I mean, yes, it did bounce off the 100. Yes, it did bounce off the -1 ATR channel, but I would not buy this because this is not a V1. What I would be looking for is the 5 EMA to cross under the 20 and then back over is what I would be looking for, or some sideways movement now and a V1. So I hope that helps. Hey, Steve Burns, good to see you, my friend. Always pleasure to have you. Always an honor to have you here. I'm always excited to see Steve. I know everyone else is. I mean, to be able to rub shoulders with Steve in a chat, it's pretty dang cool, man. It's pretty cool. So thank you so much, Steve. Hope you're doing well. Steve says, great share, Greg. Paul Tudor Jones is one of the traders that I have modeled more than anyone else. I know. I mean, he's the man, right? He is the man. He made $1 billion trading futures. So, if he has rules, I probably want to model those rules, right? Steve says, Beyond and Space don't care about the market is down today. They are both up huge. Yeah. So I did see Beyond was up. I should probably put Virgin Galactic on my. Wow. A mere 11%. A mere 11%. I'll tell you what, I've told you this, guys, before, but I love the idea of this company. And I was looking here I was kind of tempted to buy down here. I'm like, of course, obviously now I wish I would have, but I didn't have a signal, so I didn't. Unbelievable. I mean, this stock has like doubled or tripled in the last few months. Wow, that's huge. That is really, really huge. And then, of course, I'll go through Beyond Meat in a second when we go through the rest. Oh, we got a poem from Frank. Awesome. A chart is just a map. It's information we handicap. But where a stock goes, nobody knows. Even with GPS, it never leaves a forwarding address. Okay, one more time. A chart is just a map. It's information we can handicap. But where a stock goes, nobody knows. Even with GPS, it never leaves a forwarding address. I mean, it's just amazing stuff, Frank. It's so good. I mean, not only just to be able to write a poem, but to write a poem that has such depth and real truth. You know what I mean? I mean, unbelievable. I'm just so amazed, Frank. That's fantastic. Thank you. I'll post that later on my Twitter if that's okay. Ryan D says, hey, everyone, they should add trying to short Tesla to that list. VXX under 30, over 30 might be my new favorite setup. Yeah, I've been watching VXX today as well, Ryan. We'll go through that, but it's good to see you. Steve says, poet, you're a poet, Frank. Love it. For sure. Joe Turner. Hey, Joe Turner. Nice to see you. Thank you for coming by. William Green says, I see the difference. So not a V1. Watch for a deep dip buy. Yes, it helps. Okay. Yeah, it's definitely not a V1 on Ford. The way that I look at this chart right here, I would be looking for a deep dip buy under 30, over 30, something like that, or possibly a break above the 200 day. No. Sorry. That was SLV that I was talking about was not a V1. Sorry. But Ford looks decent. Yeah, but this one is definitely not a V1. It's washed out yesterday's low for sure, but it would need to close above yesterday's close in order to be correct. Okay. So Dow's down 147 points. Okay, what was that? All right. Dow's down 152 points now. So, if somebody were to look at the Dow, they would think, oh my gosh, the market's getting killed. But really, it's Boeing that's dragging the Dow down more than about anything. All right, well, let's get to it. Go through the charts, see if anything looks interesting today. Apple, I'm always surprised when I see Apple down. It's like seeing a rare wild animal out in the wilderness. Look, it's a down day on Apple. You never see that. So Apple's been very strong here. Technically today, however, though, we did have a false breakout to the upside. See the previous range? Friday, it broke up to a new. Now it's come back down into the range. I mean, I'm not saying go ahead and short this here, but I'm just pointing it out that it currently right now it is a false breakout of the downside. What I would be looking for is a pull back into value in between the 1 ATR and the negative 1 ATR pullback. Will it ever come? Yeah, of course, it will come eventually. And maybe not for a while though, right? But again, have to be patient with trading. You have to look at a chart when you're not in it, be objective and say, where would I buy this? Okay, I would buy a pullback. A lot of people are going to buy a pullback on this stock, I'm pretty sure. We have earnings coming up, so it'll be interesting. So nothing on Apple, need a pullback into the value zone to even get interested. Adobe up today. Looks like it made new high here, 79 RSI, way too high for me. As you know, this is going to be the case on most of the charts today, everybody. I need to pull back at least into value. Any price action between this green line and this green line, I consider the value zone. I consider it fairly priced. Anything under the negative 1 ATR channel, I consider undervalued. Anything over the 1 ATR, I considered overvalued. So I do not want to buy overvalued. I want to buy in value or below value at the very least. Dr. Alexander Elder taught me, he said, traders and investors are the only people that don't want to buy anything on sell. They want to buy things fully marked up here instead of waiting for it to at least be a reasonable price or below value. So, and I think he's totally right. Amazon's up today. Interesting. Well, this is what I was talking about. Amazon was above the 1 ATR channel. Want to wait for it to come back into the value zone. Better price here, obviously, than here, right? It did come into the value zone. It has moved sideways. But we do have a V2 here. Here's day 1. Here is day 2. Here is day 3. Day 2 washes out day 1. Day 3 closes above day 1. So can I take it? No, Grandpa Greg cannot take this because on a return to value, I cannot buy if the price is more than 3/4 from here to here. So here is half. 3/4 is about here. It's too high for me to buy. If it just goes on up, oh well, that's how it goes. There's nothing I can do about it. But those are my signals. And the reason why is because as soon as we start getting to that 1 ATR channel, we're going to find some resistance. Second ATR, we're going to find more resistance. Third ATR, we're going to find more resistance. Remember, 90% of prices fail here at the third ATR channel. So the closer you get to that, the more the rubber band's being stretched. So yes, this is a V2. But with my particular filters, I cannot buy it here, unfortunately. All right, Boeing. All right, well, look at this, guys. Down 3.54%. Now, want to show you we do have a setup here. We have a low. See how deep the MACD bars are on this low? See how deep these red bars are, showing lots of momentum to the downside. Then we rally back into the value zone. We do get some positive MACD. Now we are lower than the previous day's low, the previous low back here, right? We are obviously much lower, but look at the red. The red is very shallow compared to how deep this first one, and this is what Dr. Alexander calls a double bottom with a bullish divergence. In his opinion, it is the most powerful technical indicator there is. I don't know if that's true or not, but I definitely know that is his opinion. So when you have a double bottom with a bullish divergence, does that mean immediately buy it? No, it doesn't. But if you have a trigger, you can buy it. Well, look, we were well under 30 RSI today. Now we're back over. So this looks very scary to take, no doubt about it. But as long as this does close above 31 RSI, I will buy this today because of the double bottom with the bullish divergence, the rejection of the 30 RSI, and also the rejection of the negative third ATR channel. So I'll have to wait till the end of the day, see if this closes above the 30. If it does, I will take a position. I will take a half a position because it is under the 200 day. So instead of taking a 10% position size, I will take a 5% position size. And it looks super scary. It is super scary. I have to be honest with you, right? They had some bad news today. Their 737 Maxes are not going to go into service until they pushed it back further into the summer. But, you know, there's my setup. I have to take it. It's a double bottom with the bullish divergence. Currently, it has rejected the 30 RSI, and now it's above, rejected the negative third ATR channel. It's above. My initial profit target would be the 50 RSI. If I'm right, that might give me 31 up to 50. If I'm wrong, 31 down to 30. So it does offer a good risk reward. So I will be looking at that at the end of the day. There is Kurt's trade right there. He's still positive on that. Kurt, if you're around, let me know what you're going to do with this. Berkshire Hathaway, it was above the 1 ATR channel, needed to pull back into value, which it is, move sideways, then look for a V1, V2. Beyond Meat, oh my goodness. So Steve had a fantastic trade, everybody. Congratulations to Steve. He took the Beyond Meat on the 5 EMA 20 crossover right here, and look at this monster trade. I mean, this is, I'm pretty sure this is the largest trade I've ever seen, or best trade I've ever seen with Steve. 38% in a matter of 5 days. I believe he got out here on this reversal bar. Then it moved sideways, hasn't done much. Today picked up steam again, up 16%. Wow. But can't get involved here. I need to pull back into value zone. Looks like we have earnings coming. How are we doing on time? All right, Caterpillar. Nothing on Caterpillar. Dow Jones, well, we were above the third ATR channel. Now we've come back into the underneath the third ATR channel. 90% of prices fail right here, so this does not surprise me. But for me to get interested in the Dow, I just have to be patient and wait for a pullback into value. Walt Disney. Down today. You know, I did buy Walt Disney here. We had a nice V1. We washed out this previous low, bullish engulfing, everything good. But I did have to get out on Friday here when it closed below halfway of this bar. Good thing I got out, it looks like. So nothing on Walt Disney. What I'm really waiting for on Walt Disney now is some kind of crossover or go down to the 30 RSI. Etsy. Etsy looks like currently we're losing the 70 RSI. If I was in this trade, I would get out here today with a loss of 70, but I'm not. So on this, I would just wait for a pullback into the value zone, look for some sideways movement, V1, V2. Facebook, well, we're definitely above the 1 ATR channel, now above the third ATR channel. Now it looks like we might close under the third ATR channel, but looking for a pullback into value. Gold, V1, but it's way here at the second ATR channel, too high for me. What I'm waiting for on gold, two things. One, either to come back down into the value zone, move sideways, look for a V1, or the 5 EMA to cross back under the 20 EMA and then cross back over as my entry. We took this trade, if you remember, back here on the 13th of December, when the 5 EMA crossed over the 20 and moved sideways, didn't do much, and then took off, and I ran out of shares there. So that was a great trade from here to there in about 2 weeks, and then I got out, and so I'm just waiting to repeat that trade. I'm waiting for the 5 to cross back under the 20 and then back over for my entry or a pullback into value. Google up today, very strong, just keeps motoring on up here. You know what I'm going to say? It's way above the third ATR channel, way above value. I am not going to buy up here. I need to pull back into the value zone. Goldman Sachs down today. It looks like it is losing the 70 RSI and the negative third ATR channel. So nothing there, waiting for a pullback into the value zone. Home Depot keeps on being strong. My goodness, you know, we had this pull back into the value zone, but I didn't have an entry here, but this one took off really nice. So looking for a pullback there. IBB, nothing quite there. If we could start moving sideways, we are in the value zone. If we could start moving sideways, look for V1, V2, that would be nice. Intel, big strong day today. If you guys remember, I was talking about not buying Intel here, waiting for it to come into the value zone. Nice sideways movement, but I never got a valid signal here. I never got a valid signal. This is a V2, day 1, day 2, day 3. Day 2 washes out, day 1, day 3 closes above, but we made a lower high. If you make a lower high, you have to wash out that previous low, and it didn't do it. So, you know, when you follow your rules, you're going to have regrets. You're going to follow your rules, do the right thing, and it's going to take off without you. You're like, why did I follow my rules? Right? And then there's going to be times you don't follow your rules and you have a big loss, and you're like, why didn't I follow my rules? So with rules comes regret, no matter what happens. So best thing I can recommend everybody is just follow your rules. Understand you're going to miss trades. They're going to run away from you that you would wish you would have taken it, but you know, take some comfort in your following your rules. In the long run, you're not going to make money unless you follow your rules. So it's a strange dichotomy. All right, Russell 2000. Well, big strong move up here above the 1 ATR channel. Now we're pulling back, right? Just need this to pull back into value. Look for V1, V2. How am I doing on time? Oh, okay. Johnson & Johnson, need to pull back into value. CarMax, really strong here. Again, need to pull back into value to get interested. Coca-Cola, really strong. A lot of money going into these defensive stocks. Need to pull back into the value zone. Lockheed Martin, just too strong. Above the 3rd ATR channel. Pull back into the value zone. MasterCard, too high. Need to pull back into the value zone. McDonald's, same. Pull back into the value zone. Merck, nothing on Merck. Microsoft, bearish kangaroo tail there. Same thing though, pull back into the value zone. Netflix was down, recovered. We do have earnings on Netflix, so this is going to be quite interesting after the bell. This may affect tech going forward. Nike, pull back into the value zone. Philip Morris, need to pull back into the value zone. PayPal, pull back into the value zone. Hughes, pull back into the value zone. Sorry, broken record here. Silver, we talked about silver. I'm looking for the 5 EMA to cross back under the 20 and then have another cross back over for an entry, or possibly, now that we're in the value zone, sideways movement. I did take the 520 crossover right here back on the 19th. This was a great trade. Look at this, entered right here, boom, 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 and got out right up here, ran out of shares. So that's what I'm waiting for. S&P, of course, we had the overnight SPY trade. That was a loser. I will be buying that again today. Bonds, strong today. Nothing there. Tesla, oh my gosh. Look at this, everybody. Up 7.42%. Those poor shorts, man. For a few days, they were feeling pretty good. And then look at this. Just too high. Can't do anything up here. Twitter, too high. Looking for a pullback. United Healthcare, same. Need to pull back into the value zone in between the greens. Oil, nothing on oil. VIX, all right, so look, the VIX is at 30.41. Currently, we did reject the negative 3rd ATR channel. We're back above. We were earlier in the day under 30, back above. If this holds above 30, I will be buying this today, but only a quarter position. Only a quarter position, because the VIX is so volatile, and a quarter position is similar to what a full position is of a regular stock. So I'll watch that at the end. Verizon, boy, just hung right there at the 100 and moved up. I am now waiting for a couple day pullback and looking for a higher low V1 or V2. Walmart, not doing much there. Energy Select, really broke down. So look, we're at 34 RSI. I would be interested if we could go under 30, over 30. So just don't want to be patient on that one. Financials, back in the value zone, move sideways is what I'm looking for. Real estate, really, really strong, looking for a pullback. Utilities, of course, we bought this back here. This has been a fantastic trade. 2 profit targets today, 81 RSI. So if it continues to move up, I'll continue to phase out some out of shares, or close below 70, or close below the previous day's low. And healthcare, nothing there. So what I am looking at today, why do I have that on there? Okay, that's GDX. So Boeing, as long as it closes over the 30 RSI, I am going to buy this because of the under 30, over 30, under the third ATR channel, over the third ATR channel, and also the double bottom with the bullish divergence. So I will be buying Boeing as long as it closes above 30 RSI, and I will be buying VIX today if it closes above the 30 RSI. So those are that's the plan for me. Let's take a look. Okay, so the market's starting to sell off a little bit more here. Bing He bought 1335. Oh, wait. All right, so let's put Bing He down, 1345. All right, so Bing He is on the board. All right, so yeah, under 30, over 30, V2, under the negative third, over. So yeah, that looks good. But keep in mind, you are shorting the market with that particular trade. William says, would BA be a deep dip? And if so, at what point would you consider a buy? It already bounced off the third. Is this one of those 3 days bad news deal? Well, I don't know if it is a 3-day bad news deal, but yes, I am going to buy this. And it is a deep dip. We went under 30, over 30, under the third ATR channel, over the third, under the negative third ATR channel, back over the negative third ATR channel, and we do have this double bottom with the bullish divergence. Here's the low with the deep bars, lower low with more shallow bars, right? So that is what is considered a double bottom with the bullish divergence. We also have an ATR divergence. See this low down here, 3, 4, 5. We were at the 5th ATR channel. We went even lower than here. Now we're only at the 3rd ATR channel, so we have a RSI divergence, or a ATR divergence. We also have a RSI divergence. See how deep the RSI was at this low? We're lower here and it's higher. So we have a MACD divergence, we have an ATR divergence, we have an RSI divergence, we have an under 30, over 30, under the negative third, over the third. So yes, I will buy it half position only. I'm taking a 5% position size. William, because it's under the 200. Murat says, in Boeing case, this is 2 days after the breakdown. The compensations are eating all of its key free cash flow, so the downtrend can take the stock even deeper. It very well might. It very well might. Again, I go into this trade assuming it's going to be a loss, right? So tomorrow, if it closes below 30, I was right. I'm out of there. If I'm pleasantly surprised, then good, you know? Frank says, only in trading could one consider buying a plane that doesn't fly. That's good. Glenn says, Boeing looks like a massive head and shoulders with a head at 440, shoulders at 380, and neck at 320. Downside potential is 160 to 200. Ooh, well, that would be tough. That would be tough. But like I said, if it closes below 30, I'll just take my little lumps and get out, and then hopefully not be involved in that. All right. Murat says Boeing is trying to borrow 10 billion USD since 737 is eating out its cash flow. Yes, I read that for sure. Zach says, would you mind explaining the RSI for me? Yes, I will. Let me do it when the market closes though, Zach, okay? It's an important thing. The relative strength indicator is what it stands for. But let me just wait till the market closes, Zach, and so we can spend a little time on it. Murat says, if XLE breaks 55.50, then there is no support underneath it. Oh yeah, I think we talked about this. Oh, down here. Yeah, well, it has held support down here, but yeah, interesting. Interesting. So it's a 3440 RSI. Tomorrow, if we had a 30 RSI, where would we be on a 30 RSI? Right about here somewhere. Which basically be the low of this previous low. So tomorrow, you know, if we could go down, if this previous low can hold, we can go under 30 over 30, I would buy it. Not because I think it's really going to go up, but again, it gives me a good risk to reward ratio, and it gives me a confirmation that the 30 RSI buyer stepped in and held it up, and that previous low held up. Okay, so let me take a quick look at Boeing. Does look like it's going to close above. Of course, we don't know. Let's look intraday what happened here. Big down. Now we've rallied back up. Be a little concerned what Boeing would do here at this halfway mark. All right. This is the previous low of the range, right? So even if we do rally, we're probably going to have some issues right here at about the 320 price as well. So anyway, as is so far, I will be looking to buy that. VIX quarter position if it closes over 30. So that's my plan. And then of course the SPY. All right, so we have about 2 minutes. Oh, Joe Turner has a poem. This is like poem rap battles now between Joe and Frank. This is great. This is great. This was my long-term plan for starting this channel. It's going to get people in. I knew a couple of them would have poems, and I would slyly transform this into a trading poem rap battle channel. This is great, Joe. I'm going to read that in a sec, right? Just want to wait. Just have to make these trades here before we close. It's awesome. All right, so we got 1 minute. I am going to buy the SPY. Oh, maybe. If it closes over 70. And Boeing, that looks pretty good. And then the SPY will buy itself. All right, 20 seconds. Okay. All right. All right. So we're good. Let's take a little look-see here, see where we got everything. All right, so I bought the SPY, our regular SPY at 331.30. VIX quarter position at 1343, and Boeing 313.36. All right, so SPY. So not too bad a day, all in all considered. XLU really was nice today. Look at that. Look at that bad boy. Woo! All right, but we did take a loss on the SPY. So very close to a break-even day, which I will definitely take on a day like today. Remember, small losses are fine. Big win. Small losses are fine. Small wins are fine. Big wins are fine. Break-even trades, totally fine. They all fit the criteria of profitable trading, but you have to stay away from the big losses. All right, so 331.30. Okay, that's the new trade there. And then Boeing. All right. 313.36. Remember now, any close under 30, I've got to get out. I've got to get out. And then VIX. $13.43. You know, I had a lesson last night with Amon, and we were talking about shorting, and he says, you know, it seems to me that you don't do a lot of shorting, but you use your VIX as a short. And that's 100% true. I like taking VIX when under 30, over 30. You know, it gives me a little bit of a hedge compared to my long trades as well. But if I'm right, I'm usually right nicely. If I'm wrong, I'm usually wrong pretty small. I've had a couple 10, 12, and 15% winners on VIX using this same approach. Do I think it's going to go up? I have no idea, but I know that I put myself in a good risk position. It's 30.58, closes under 30, I'm out for a small loss. If it goes roaring up, then I have, you know, a good upside compared to my risk, good risk to reward. So Boeing bought there 313.36. SPY, overnight SPY trade 331.30. I'll be buying that again, or I'm selling that first thing tomorrow morning. XLU, we've been in this for almost a couple weeks, getting close to running out of shares. 2 profit targets today. This has been a monster. And then VIX initiated the new position today. So that's that. Okay, so I'm going to get to the rest of the questions, everybody. Before I do, I just want to quickly put in my quick little daily plug and let everybody know that I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. It's a one-on-one lesson. I have a course, 5 sessions. Each session somewhere between 2 and 3 hours. I was actually up till 1 o'clock last night because I was teaching I was teaching a lesson last night, but it was a late lesson, so it went till 1 o'clock. But it was great. It was 3 hours. So let me take a look real quick. Sorry. Yeah. So yeah, Kamal and I had a good lesson last night. Really good lesson last night. But I have 5 sessions, each session 2 to 3 hours. I teach you everything that I have learned from all my mentors and all my own experience over the last 24 years. I think it's a great course. It's $1,000, but I definitely think it's worth the money. I mean, I teach you everything I have learned for 24 years, right? And I've done it in real time for a living. So, you know, if you're interested in taking this course, please let me know. You can reach out to me on my email, which is in the description of this video, or you can send me a message on Twitter as well. And, you know, if you're interested in taking the course, I do like to have an initial Skype call with you. There's no obligation. Skype call is totally free. I just want to know more about you. I want to learn more about your trading history, what your challenges have been, what your goals are, and then I'll put together a lesson plan that will hopefully help you achieve those goals, right? And I've had great success with my clients, and I think they've all been very happy that they've taken the course. So if you're interested, please reach out to me, and we'll set up a Skype call. And then secondly, if you like today's video, if you like today's live stream or podcast, whatever you want to call it, please do me a favor, hit the thumbs up button. It helps to grow the channel. A lot of people out there need help with trading, and I think if we could get them here on a semi-regular basis, it definitely would help their trading. That's why I started this channel. I really wanted to give back. I really wanted to share with people what I've learned, so they don't have to go through all the horrible experiences that I went. I mean, almost life-altering experience that I went in my 20s. And then thirdly, if you haven't subscribed to the channel, I would really appreciate it if you would. I've got 998 subscribers. So my goal is 1,000 subscribers. So if you haven't subscribed, I would really appreciate it. Even if a couple of you did it, it'd get me over the hump. It took about a year. It took almost 1 year exactly to get 1,000 subscribers. So anyway, that's my plug, everybody. Thanks for holding through that with me. And so let's go back over. So Zach, we were talking about the RSI. RSI means relative strength indicator. Essentially, RSI is an indicator that measures how far and how fast a price moves. If it starts going sideways, if the price just moves sideways, the RSI is not going to increase. But if you have a big move that goes up quickly over a short period of time, the RSI is going to go very high. And historically, 70 RSI is overbought, 30 RSI is oversold. So that is what RSI is. It doesn't mean, I mean, when you look at RSI in the rear view mirror, it seems very easy. It's like, hey, just every time it gets down here, buy, and every time it gets up here, sell. But it's not, in reality, it's not that easy to do. But it is, one of many indicators that you can use. As you guys know, I like to look for indicators, multiple groups of indicators, like on VIX today, right? So obviously VIX has been going down. It went under 30, back over 30. There are buyers, invisible buyers, that when it gets to the 30 RSI, they magically appear. There are sellers. When it gets to the 70 RSI, they magically appear. But again, RSI just measures how far and how quickly a price move is. And the theory behind it is if you move too far, too fast, you're going to get overbought and you're probably going to run out of buyers at that level. So that's what RSI is. And again, historically, 30 RSI is oversold. 70 RSI is overbought. So I hope that helps, Zach. Okay, here's Joe's poem. Man, I'm like the worst poem reader ever. The stock took the steps all the way to the top. The stocks took the steps all the way to the top. Everyone knew soon it may drop. But the elevator was broke and it made the wind blow, and the stock took a leap right out the window. That's great. That's great. Joe, are you on Twitter? And if you are, could I share that poem like I do Frank's? The stock took the steps all the way to the top. Everyone knew soon it may drop, but the elevator was broke and made the wind blow. The stock took a leap right out the window. It's amazing. This is so great. I have two trading poets in here. It's unbelievable. Thank you, Joe, and thank you, Frank. William says, okay, I'll buy it on the SPY. I also have positions now in F and Boeing. Took a small on Boeing due to bad news, but they also had 2 good reports from aircraft test positive. Okay, so William is on the board with, so let's put William up here. William Green. Okay. And Ford. Where did you buy Ford, William? Are you comfortable sharing the price with me? All right, so we have We have William Green on board with Boeing, small position, and also with Ford, right? And again, I'm not telling you what to do. I'm just giving you my opinion on what I would do if I was trading this. If Ford closed below, today's the washout bar. If it closes below halfway of the washout bar, that's where I would exit position for a small loss. So. Frank says, don't see a trigger on VIX. So I do on my charts here. You can see how we're at a 30.58 RSI. You can see intraday we did go below 30. We got down to about 28.19. So the market went down under 30, tested that level, didn't like it. So at least on my chart, Frank, I do see it under 30, over 30, and also an under the negative third ATR channel, over the negative third ATR channel. Joe says, no Twitter here. Okay, I'm going to share it then, Joe, if that's okay. I wanted to give you credit for it, but fantastic. Really great, Joe and Frank. Okay, William, 921. All right, so 921. All right, I think this is the first time we've had William on the board. Anyone else there? Enter, exit any positions? I don't know if Kurt's on there, but this one looks like it did close below the previous day's low. RNST inside day. So, earnings today though. I hope I'm on solo. Realizes that there's earnings after the bell and got out. We'll just have to see. I think probably Solo got out of this Nobel Energy, but I'll just have to wait and see. Walgreens looks pretty interesting in the coming days. We've come down here, we've moved sideways. We're under the 30 RSI, we're under the 200-day, we're under the negative third ATR channel. But if we can pop back up with the rejection of this previous low, then we'd have a false breakout to the downside. We have an under 30, over 30, under the negative third ATR channel, over the third, and over the 200. That would be excellent. So nothing there today, but we'll see what happens. You're welcome, Joe. Okay, Williams Green stop is at $9 even. Okay. You got to stick to that now, William, right? Got to stick with the plan. We are now your risk managers. Oh. Okay, so you're using a little wider stop. Okay, that's fine. That's good. Frank says, I'm on the phone screen, which is a postage stamp. Oh, boy. That'd be tough for me to trade like that. That would be tough. All right, again, recap just real quick. Boeing, under 30, over 30, under the negative third, over the negative third, a bullish divergence with a double bottom with a bullish divergence. Here's the previous low. Here's the readings of the MACD. We rally back up into the value zone. We have some green MACD, which is required. We are lower than the previous low with only very shallow MACD here compared to here. So we shall see what happens. Don't know if it's going to go up. I assume it's going to go down. So if it goes down, I can get out quickly, keep my losses small, and keep my equation for profitable trading intact. Small losses, break-even trades, small wins, large wins. That's the formula. SPY over 90, got that. We'll see what happens to sell it first thing tomorrow. XLU just keeps motoring up, but you know, that was a nice entry right there in the value zone, and it just kept on trucking. And then the VIX, the under 30, over 30. And then Bing He has the S Dow, which is short the Dow. I think this is 2 times short, if I am correct. Am I correct, Bing He, that this is 2 times short? But under 30, over 30. Under the negative third, over the third, and a nice V2. Does it mean it's going to go, this trade's going to go up? No, it doesn't, but he put himself in a good position with some legitimate support underneath him and a good risk to reward. Joe Turner says, I'm in GILD at 62.59, gut buy. Gonna bail out day before earnings. All right, well, let's take a look at GILD. I don't think I've seen this one. All right. So did this go under 30 and over 30? Let's see. I don't know. Pretty close. It essentially bounced at the 30 RSI. So what's your plan on this one, Joe? So you got it at 62.59. So you're in the money already. Congratulations. Oops. All right. Joe's on the board. And I understand you're going to bail out before earnings, but do you have any other parameters? Earnings are over here on the 2nd of December. Do you have any other parameters as far as your profit or your loss there, Joe? William says BA stop is at 312.19. Sorry, yeah, 312.19. So let me see where the under 30 would be tomorrow. It's one of the best features of Trade Navigator, guys, is this little what if tool. So close enough, 309, 309.26. So I'm giving myself a little bit more room to the downside. And so you let me know tomorrow, William, but I'm glad to know that stop's in place, and that's what's important. Bing He says S Dow is 3 times short. Ooh. Well, well. Did you take a regular position size on that then, Bing He? Take a look here, see what's going on. So Boeing's down a little bit after hours. S&P is down after hours. VIX is up after hours. XLU is even. Let's see, did Netflix report earning yet? Oops. Ooh, Netflix is down after hours. Down about 1.35%. So it looks like most of the indices are down after hours with the VIX being up. Okay. Joe says, I'm out of GLD if it closes below 62.23. Okay, so you got a short stop on that. Most important thing, guys, there's no perfect trading plan. There's no perfect trading approach. all I want to hear from you is that you have some kind of plan, right? To make money in trading, you do not have to have the most perfect plan. You can have a very basic plan. One day I'll have to share with you some back test from Van Thorpe. This is in one of Steve Burns' books, entries and exits books. It's fascinating. He flips a coin, whatever the coin tells him, heads he goes long, tails he goes short. And then he uses a 3 ATR trailing stop. He uses a variety of 10 different uncorrelated positions. And, if he's long, he keeps long until it goes against him 3 ATRs from the high in the trade. If he's short, he gets out short and closes his position if it goes 3 ATRs from the low in the trade. That approach, use just flipping a coin, say IBM, we long or short? I don't know. Let me flip the coin. Flip the coin. Okay, we're long. Okay. You buy at a completely random place, use a 3 ATR trailing stop. And I believe, and Steve, if you're listening, correct me if I'm wrong, but I'm pretty sure based upon your book that never had a losing year, just with that very basic approach. Evan says, was today the day to buy spot? I don't know. So here's the thing. This is a really good example, Evan. See how we were above the 1 ATR channel? We needed to come back in the value zone. It did come into the value zone. It did move it came into the value zone, moved sideways. See how we made a lower high though? This high is lower than this high. Then you have to wash out that first low. Well, we did wash out the first low here, and we had a V1 here. So everything looks good. Problem is, no. This day one bar, see here's day one, day two, did wash it out, did close above it. But you see how this bar, the day one bar, is larger than 1 ATR? For a price to move more than 1 ATR, either to the upside or the downside, you need an extraordinary amount of buying or selling pressure to move outside the 1 ATR range. So on Friday, it had quite a lot of selling to the downside. So it doesn't mean it can't go up. I mean, obviously better to buy here than up here, right? But if a day one is larger than 1 ATR, even if you have a V1, I don't want to get involved because I know Friday we had an extraordinary amount of selling. So to me, I wouldn't be able to take this trade. Does that make sense, Evan? It's like, I know all these rules, right? When I first started learning return to value, V1s, V2s are higher, low, V1s, V2, I was like a little kid. Ooh, there's one, there's one, there's one, there's one. And my teacher, Kerry Lavorne, just basically shook his head and sighed and said, Greg, you have V1s, V2s all the time. They happen all the time. You could find them all over the place. But any V1 and V2, they're not made the same. V1s and V2s have to be very particular. They have to be above the 1 ATR channel. They have to come back into the value zone. They have to move sideways. They have to wash out the previous low and trigger. And then when they trigger, they can't trigger too high, right? No more than 75% between here and here. Right here is about the maximum. Or if you do a higher low V1 or V2, same thing. Day one's bar cannot be too large. And you can't have a gap either, right? You can't have a gap of over quarter ATR. So there's a lot of different rules. So if Aman's listening, or Kamal, sorry. If Kamal's listening, I'm teaching a Kamal right now. And Aman solo. So sorry I mixed up his names, but if Kamal's listening, boy, you did a great job last night on our lesson. Very thoughtful questions, really good questions. And, he did ask me to point out some possible short positions. As you know, I don't do a lot of shorting. I think I've probably shorted 4 or 5 positions last year. I think maybe I won on 3 of them, lost on 2 of them. But yes, I definitely will, Kamal. I definitely will look out for some potential short positions, if they meet all the requirements and everything I'm looking for. But I did not see any today, but I will definitely point those out. So Netflix had weak guidance, domestic subscriber miss. IBM soars on strong earnings. All right. Let's see what they mean by soar. Soar would have to be at least 3%, right? 4%? $3.87%. Pretty close. Pretty close. I guess that's a soar. Hey, Kurt is here. Hey, buddy. Nice to see you. Hope you're feeling better. I know Kurt had the flu. Kurt says, hey, Greg, made it in late. Yes, I took profit on BRKB and got out today with the close below yesterday's low. Okay, excellent. I was hoping that would be the case. So good trade. I don't know if Kurt phased out or not, but regardless, this was a profitable trade. So congratulations, my friend. So we'll take that one off the board then. Okay. Oh, good. Kamal was listening the whole time. Perfect, perfect, perfect. Yeah, I think that was a good class we had last night. Really great questions. Kamal knows a lot about trading, works with options, so forth. So, yeah, it was a good lesson. I'm looking forward to our next one on Thursday, Kamal. And like I said, if something really jumps out of me as far as a short position, I will definitely point it out. Kamal says, good lesson last night. Learn a few things. Still digesting it. Looking forward to Thursday. Me as well. Me as well. All right. If anybody has any other questions or comments, just let me know. Otherwise, I'm going to put on my hiking boots, head on out of here, go tromping around in the snow with my dog, Katie. And Kamal, by the way, what we talked about yesterday, when you do a lesson with me, the Skype lesson, you record it. So again, I would suggest re-watching that lesson now as a third party, and I think you'll get a lot out of that as well. Oh, good. Kurt did phase out. Excellent, Kurt. Excellent, excellent. So you flat now, bud? Are you flat now, Kurt? All right. Well, listen, everybody, thank you so much for coming by. I appreciate it. I always look forward to seeing you all. I think we have a great group, and I just think it's fun every day. And I hope you're learning something. I hope the time you're spending here is helping you with your trading and your investing, or how you view the markets. I really do. Let's take a look. So, couple things before I let you go. Two things. One, as always, please go out, try to do something nice for somebody today. Just go out of your way. Nice, simple gesture. Say hello. Hold the door open. Help somebody with the bag. Just a little something. You never know what that one nice little thing is going to do for that person's day. It might turn it around. So please just try to do something every day. It's free. It's a good policy, and it will help your trading. Guaranteed. I don't know if it'll help your trading, but it should, right? And then number two, on your way out of here, if you could hit the thumbs up button, I would really appreciate it. It helps to grow the channel. And like I said, I'm two subscribers short of 1,000. So, the one nice thing you could do to start the day would be to hit that subscribe button if you haven't. So And then I wanted to wish Dr. Jorgensen good luck on his trip. He took off yesterday to Kuala Lumpur. He's going on a 5-month motorcycle trip there in Kuala Lumpur in Indonesia, in that area. So I know he'll be checking in. I think he has to wake up at like 2 in the morning to watch the live stream, but hope he has a good, safe trip, and keep in touch, my friend, okay? Kamal said yes, started doing that today. Great. Glad to hear it, Kamal, and I really look forward to Tuesday, and we're going to do a lot more chart study, and I think you did fantastic. And Kurt says yes, flat. Awesome. Awesome, awesome. All right, everybody, I guess that's it for today. Thank you all for coming. Hope to see you tomorrow. Hope you have a good rest of your day. Go out, do something nice. Be safe, right? And look forward to speaking with you tomorrow. Take care now. Have a good rest of your day. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.